What's going on, guys? Brendan from Market Makers. Friday night, almost 7 o'clock. Just put out my Bitcoin video. Definitely check that out. We need to talk about the indexes. So much going on in the world. So many moving parts are going at the same time. Guys, we got a conflict in Eastern Europe. We have record high inflation. The new CPI number came in higher than expected. According to the Fed, inflation is 7.9%. Using the same Fed templates from the early 80s, late 70s, inflation just touched 16%. Big difference. And if you guys buy gasoline for your cars, you see that. And you see the media and you see the administration always putting the spin out there, okay? It's all about propaganda. It doesn't matter what side you're on, doesn't matter what country you're in. It's all propaganda because this is all the fault of the conflict. Even though if you look at oil charts, and if you've been in our room, we've been trading oil since it was trading in the mid 70s, okay? And it touched over $130. It recently pulled back down. But we've been trading oil. Oil has been on a march up. And we have an administration that killed one of our pipelines, the Keystone Pipeline. We were energy independent, and now we are not. Now we are importers. They killed one of the pipelines, and he also, President Biden, did not renew a lot of energy leases, okay, for fracking and natural gas. You can think that's good. You can think that's bad. Bottom line is your prices are going up because of it, because now we are reliant on second and third world countries to do us favors, and some of these countries hate us, okay, like Venezuela, and we're asking them, begging them for more oil. So I think that's bad policy, but how does that affect where we're at? Well, the average person's getting squeezed right now, okay? So when the Fed comes out, the Fed's going to announce their rate hike. Most everybody thinks it's going to be 0.25. They've pretty much foreshadowed that. Keep in mind we are at zero interest rates right now. 0.25 will tangibly do nothing, which is why I want to bring this up. There's a situation here where you could have a rally after this Fed meeting. If the Fed comes out and says, look, we've reviewed all the data, and yes, inflation is a little bit sticky, a little bit stickier than we thought, but we still think a lot of it's transitory. We still think a lot of it's going to go away on its own. And so we're going to do a quarter-point hike. Now, they still have to actually stop printing money. They still have to actually stop buying assets in the marketplace, and they still have to actually unwind their debt, okay? If they're going to do all those things, there's a lot of debate whether or not they're going to do all those things. So what they say and what they do could be two different things. I'm telling you this because the markets could still rally up because of this, okay? Now, they will rally to resistance. Whether they flip that resistance or not is absolutely key, and understanding where the resistances are is absolutely key. That's how you can make highly profitable trades. Guys, you can get this education in our room. The Discord link is in the video description. Follow us on Twitter as well. All our good stuff is in the video description. Let's talk about the SPX, guys. I have a bearish pattern here showing that we can get to the 1 fib at 4,476. However, you have the 233 and the 55, okay? These are moving towards a death cross. For those of you that are new to the channel, a death cross is when you have those two EMAs, in this case, moving averages, 50 and 200, but for the EMAs 55, 233, when they cross, this is a telltale sign of a bear market, okay? Because moving averages are lagging indicators. It's the health and welfare of the asset that you are trading. We already have a death cross on Bitcoin. We already have a death cross on the Russell 2000, the hyperspec index, right? And the NASDAQ now has a death cross. I'll show you those really quickly. Death cross in your NASDAQ just recently occurred. Death cross in the Russell 2000 occurred back around the same time as Bitcoin. So looking at the SPX, what do I expect to happen? If we do get some type of rally from this Fed news, you can look at this dissension. If we do get some type of rally, we're going to meet the 233 and the 55 as well, okay? So these are all going to be in the same area. If your other moving averages, your 89, your 34, your 21, all of them. But they're all going to be roughly in the same area. We're going to have a lot of resistance here at the 618, and as you can see, we ping-ponged off it already. You see that? We wicked it almost on the dollar. What was that high here? That high was 4,334. The 618 is 4,334. It was literally on the dollar. Laying out your fibs accurately can produce profitable trades. The most commonly retraced 2 fib is a 618. We got up to it, we fell down, we got rejected, okay? And you can see your 233 cutting across. So I do anticipate the next market push up. We're going to try to challenge the 233, and it's going to come down to the 233 is going to be slowly descending, by the way. So depending when we push back up, this could be below the 618. 618 or at the 618 or just above it. It's going to provide a ton of resistance. And if we do make it past the 618, we got to deal with this pattern. So we can make it past the 618, come up to this pattern, and this is where you're expected to get retracement. Holding a key level of support to make a higher low is absolutely critical. And if you do not, you are going down in further dissension. Watch my bubble bursting price target video if you want to see where I expect these markets to go. Rule of thumb is going to be the COVID lows. So go look at your stocks, your cryptos, everything. Look at your COVID lows using Fibonacci wave projections in that video. I get you to the COVID lows, and that can take time to happen. As I mentioned in the Bitcoin video, 2.5 years the dot-com crash took to unwind the SPX 50%, the NASDAQ 82%, Amazon 92%. Okay, took 2.5 years. So this could take time. Could take a long time. And of course, the Fed's not going to go quietly into the night. They're not going to let it just crash straight down. So you can expect some type of stimulus, things like that. Maybe they have 7 rate hikes scheduled, but they pull 4 of them off the table. They'll do things like that subtly to try to manipulate the marketplace. Just be aware of what's going on in the market. Looking at the NASDAQ, guys, NASDAQ, again, a hyper-spec index, lots of growth stocks. Think ARK, okay, Cathie Wood's ETF. Lots of growth stocks. The majority almost now, I think we're up to like 47%, maybe it's 45%. 45% of the NASDAQ stocks are 50% or more off their all-time high. 45%. This is echoing the dot-com crash beautifully, very, very beautifully. So watch my bubble videos to get informed about these previous bubbles. I traded the dot-com crash. I traded the housing bubble in '08, and now we are coming up to the mother of all bubbles, a 3 sigma bubble, a super bubble, as Jeremy Grantham calls it. So this is where we're at now, guys, with the NASDAQ, and we're doing the same thing. It's just descending. You're along this line. This is a 45-degree angle here, this red line. We're coming up to it, testing it, falling down, coming up to it, testing it, falling down. Now, it's interesting on the NASDAQ and Russell, because of how they fell, you do have a higher move up here to get to your 233 and your bigger moving averages, your 89, your 55, etc. It's all higher up here. So you could see more of a pump when the time does come. Now, that pump, like I said, can easily come from the Fed if the market, markets are very emotional. If the market deems that to be a bullish thing, the Fed only raised it 1/4 point. And if whenever the conflict ends in Eastern Europe, I expect some type of rally. How steep, how strong, I don't know. But I expect some type of rally because that's how these markets are. If you turn on the business news and they're like, oh, this is great, the conflict's over, markets are going to reopen, things will go back to normal, I expect some type of rally. So we'll see how long this thing goes on. But, as of now, everything is still looking very bearish in the marketplaces, especially with the price action, the candle action. And let's go ahead and grab a dissension here from our all-time high in the NASDAQ to where price is right now is a crash. You're down over 20%, okay? You're down over 20%. That is a crash in the NASDAQ. You have a crash in the Russell 2000. You have a correction in the SPX and a correction in the Dow. So just keep that in mind, guys, when you are thinking about investing in the marketplace. You don't want to invest in a descending market. Just, again, this is for education and entertainment purposes, but just be very careful what you're doing in these marketplaces. So looking at the Russell. Russell is moving identically to Bitcoin. I've done 2 overlays now of the Russell with Bitcoin. They even had the same pattern that they're tracking to. Look at our 233 coming right to the PRZ of this pattern. And again, the price will move from X to A to B to C up to D when you get a rally. Now this rally has to go past the 1 fib. It may not make it. And this rally has a 233 knifing right through the pattern, which is why that would be a beautiful resistance point for a potential short if you make a top and if you start rolling over. Could be an excellent trade opportunity there. And guys, you get all this information in the room. And we definitely tweet about this stuff too. So definitely follow us on Twitter. So this is something I'm tracking closely. And yes, guys, I do believe all of these markets will eventually be pulled down. But keep in mind, and I've said this many times in the YouTube comments when people ask me questions about, well, couldn't we go up here? Couldn't we go up here? Look at price, how it moves, guys. Price moves in waves, okay? You're going to get pumps. You're going to get dumps. You're going to make shapes like double tops, and you're going to break your neckline, and you're going to descend. There's different things that happens in price, but the key thing is, are you making new all-time highs? Are you returning to a bull run, or are you just constantly descending, making patterns, making shapes, and having the market descend? Because you were in consolidation in the Russell for almost a year and you got a massive up thrust outside of your Wyckoff trading range. After the up thrust, huge sign of weakness, printed a W pattern, you got a harmonic here, and then price fell apart, and that's where you're at right now. And I scribbled all over that like a Etch-a-Sketch. But I think you guys get the point. So, all right, guys, go ahead and like this video if you would for me. Smash the like button, hit the subscribe button, and check out my Bitcoin video. And I will be putting out a Forex video, I believe Sunday. I'll put it out before the market opens. So if you guys want to check out some Forex patterns and trades that I'm looking at. And if you are interested in Forex, I am starting a Forex boot camp next week as well, towards the end of the week. So you can join the room, check out our boot camp, and you'll get a background in Forex and a crash course in Forex. And I will teach you what I know from trading that market for over 20 years. All right, everybody, have a fantastic weekend. Talk soon.